Live from Bloomberg's world headquarters in New York, welcome to Bloomberg Crypto. I'm Tim Stenevec.
And I'm Matt Miller. A new development with the bankruptcy of FTX. The troubled firm wins court approval to fully repay customers, at least in fiat terms, whose assets were locked on the platform. Customers' recoveries are given a massive jolt by the crypto rebound.
The collapse of FTX, always a reminder about regulation and some of the issues surrounding crypto. We're going to speak with Rettig from Polygon Labs about the future of DeFi regulation.
And a lot of buzz in the past year about crypto ETFs. Now we get the first filing for a fund that invests directly in XRP, the world's 7th largest digital token.
All that and more ahead over the next half hour on Bloomberg Crypto. But first, here's a snapshot of the market. Seeing a little bit of red for the major cryptocurrencies. Bitcoin was higher earlier in the session, now lower, trading just around 62,300, down a little more than it was just a little earlier in the session, 1.2%. Over the last week, it's ranged from a high of 64,300 to a low of just under $60,000. Reminder, still higher by 43% so far this year. Kind of a similar story for what's going on with Ether, down about a percentage point, trading right now at about $2,400. It was as low as $2,300 and as high as $2,500 over the last week. Matt, what do you have your eye on?
Well, as I was saying before, Tim, FTX won court approval to fully repay customers. A bankruptcy judge said FTX will distribute at least $12.6 billion as part of a plan for payments to customers that were hurt by the bankruptcy of Sam Bankman-Fried's firm under a sweeping proposal formulated by advisors who took charge of the exchange after it collapsed. And I should say, Tim, fully repay customers in fiat terms, not in, for example, Bitcoin terms, because that price has quadrupled since the collapse.
Okay, so let's see what's going on here. We got all the details on this plan with Bloomberg's Jonathan Randles. He joins us on set at Bloomberg HQ. What is going on here? Why are these customers not getting paid necessarily the exact amount that they would had it been fully following what's going on with Bitcoin? About 3x since it was 2 years ago. Think back to that time.
Yeah, so the lawyers yesterday speaking in Delaware bankruptcy court said repeatedly, as they have throughout the case, that FTX there was a massive shortfall between the amount of crypto assets they claimed to have and the amount of crypto they actually had. They didn't have a ton of Bitcoin, and so ultimately they determined that it was more practical to pay everyone in cash because if they were going to, do a one-for-one for whatever your token is, they would have to go out in the market and acquire it in order to do that. So the overall point is the FTX advisors have said that there's a massive shortfall between what FTX said they had in digital assets and what they actually had.
So basically, you'll get paid back, 119% in dollar terms, but Bitcoin actually up 4x, right? Because it was 15,000 on November 8th, 2022, which is the last day you could essentially withdraw. And now it's obviously over 62,000, as Tim just showed us on the chart. They're not going to get anywhere near that. Are customers protesting this bankruptcy plan?
Yeah, I mean, there's been a lot of criticism of the fact that it's being paid out in cash. It's similar to what we've seen in other crypto bankruptcies, where either customers are getting paid in cash after they've had, their crypto locked on a platform for, however many years, or they're getting partially repaid in crypto, not receiving, the full benefit of what they had deposited before the collapse. So in FTX's case, yes, there's a lot of criticism about it, and there are committees that are representing customers who've been working with the advisors, and the advisors have basically said that simply they don't have the crypto that everyone thinks they should have. So it is unfortunate. That yes, they're getting 119%. That sounds great, but that was the best they could do. Resulting from the collapse from this huge enterprise.
Well, speaking of the collapse, FTT, the FTX token.
Yeah.
Remind everyone what it was, what it is, and what the status of that is now.
So FTT was FTX's utility token. I am not a crypto reporter, but my understanding is it kind of functions like equity, as a proxy for that in these different crypto firms. So under FTX's bankruptcy plan that was improved, nobody's receiving a distribution or any compensation on account of their FTT. It's being wiped out. That's very similar to what happens in 99% of Chapter 11 cases, across industries where shares are canceled for nothing.
Right, and if it's worthless, I mean, they'll give you as much FTT as you want. Jonathan, thanks so much for joining us. Jonathan Randall's there from Bloomberg News talking to us about the recovery. Moving on to the regulatory outlook, top venture capital investors, including Pantera Capital, Dragonfly, Framework, and Skybridge, expect cryptocurrencies to get a boost on the back of potentially clearer regulations, regardless of the outcome from the U.S. election next month. Let's discuss with Polygon Labs Chief Legal and Policy Officer Rebecca Rettig. So, Rebecca, I was, looking through your notes and wondering, are we expecting clearer regulation in terms of, if we get a red sweep or if Kamala Harris gets into office, but we still have Republicans in Congress and taking over the Senate? I guess it doesn't matter, right? Because both candidates have been more pro-crypto.
Right. I would say crypto is a nonpartisan issue in many ways. It was always meant to be credibly neutral. I think what's very clear is we're not going backwards, right? The tech is here to stay. There's been widespread acknowledgement about it. And the question really is, how does crypto fit into the larger tech narrative that's really important to the United States? Do we expect clearer regulations immediately? I'd say probably not right away, but I do know that there will be continued efforts, both from the industry and from the policymaker side, and hopefully regulators as well, to really find clear rules of the road for this space to be able to move forward in a way that's really great for users.
In your view, do we need to see a change at the top of the SEC, even if Kamala Harris wins the election? She might keep some people in government.
I think we certainly need to see a change in approach at the SEC. I think the current approach has not protected users or consumers as it's meant to do. And in fact, many ways, not protected them from the frauds that may be out there and stymied what is really important in terms of building in this space and having a productive path forward for all the crypto firms who are really trying to do it right.
So what are the most important issues, and you've recently testified before Congress, that they need to work on? What if you were advising them on the first thing to tackle in terms of crypto regulation, DeFi regulation, what would you say they need to do?
The first thing that needs to get done is a stablecoin bill. I think that's unquestionably the most important way to move forward in the United States. Stablecoins are out there. They are obviously regulated by a number of the traditional money services and money transmission laws, but there needs to be a clear path forward for the private stablecoin issuers in the United States. I think market structure, which there have been a lot of efforts for that already going on, both in the House and the Senate. And we saw the historic passage of FIT 21 this past year, at least out of the House Financial Services Committee, is really the next thing to tackle after stablecoins. And then the third thing is more education on DeFi. I don't think there should be a rush to regulate, as we talked about during the hearing in September last month. But there definitely needs to be more education, more use cases, and more efforts from both industry and policymakers to work on what makes sense for DeFi, because it's very different from the centralized players in this space.
How would you balance that with making sure that consumers are protected? No shortage of graft out there when it comes to schemes around crypto. We've covered those very closely. We cover those regularly. How do you protect consumers?
I think generally in crypto, the regulators should be looking at the fraud questions, right? Fraud is traditional, whether it's in TradFi, crypto, or any other industry, and that's what should be the main focus in order to protect users. And then putting in place either clear rules through rulemaking in agencies or legislation, which I think is very necessary in this space, is a way to protect users. But I think the other really remarkable thing about crypto is there has been a lot of organic work to be able to put protections in place from within the industry. And a regulator I spoke to outside the US a few months ago said to me, the really important thing that they do in traditional financial services is identify a problem and come to the regulators with a solution to it. And crypto needs to be doing the same. And there are a lot of efforts in that regard, both, as I said, organically and from within industry today, to really find the solutions that, even if they don't look exactly like they do in TradFi, will protect users.
You come to Polygon with an incredible resume, Rebecca, from Columbia Law to U.S. District Courts to some of the biggest law firms on the street. Isn't fraud in crypto just the same as fraud in every other facet of the law?
It is, exactly. And that's what I mean when you can tackle the fraud very easily. We already have the tools to do that. You don't need any new tools to tackle fraud. And so what everybody should be focusing on is regulators, if they're looking on the enforcement side, should be tackling the fraud. And in terms of any new rules of the road, that should come through either clear rulemaking procedures with due process and everything that is required, or through legislation, which we do need for many areas of this new and emerging space.
Rebecca Rettig, Polygon Labs Chief Legal and Policy Officer, joining us this afternoon. Appreciate you taking the time. Well, coming up, venture capital funding on the decline in the crypto space. We're going to discuss why in the future with MNCC's Ayesha Kiani.
Then what we know so far about Bitwise's filing for a new ETF tied to Ripple's XRP token. It would be the first on Wall Street.
And to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
All right, let's take a look at how sentiment for crypto startups has dropped ahead of the U.S. election. Overall, crypto M&A activity and value fell in the third quarter after an uptick in the previous 3 months. This, according to one report, all despite the drop in interest rates for borrowers. Ayesha Kiani is Chief Operating Officer at quant digital asset firm MNNC Group. MNCC.
MNNC.
Sorry.
Group, yes.
There's a lot of letters in there.
I know,
what does it stand for?
Eminence. It stands for eminence.
Eminence.
Yeah, the fact that we've been doing it for a while, we're eminent.
All right, so I have one fundamental question that I've been wondering about crypto since I started covering it in 2012. And it could just as easily be about Bitcoin, but I think if you frame it with Ethereum, it's even more interesting. So much technology is being built on Ethereum, and it's clearly a valuable technology, the blockchain ledger and the way they specifically do it. But I don't understand why we need to buy very many of the tokens. Why should the value of the token rise, even if many people are using the technology?
Excellent point, right? So first of all, BTC, which originally started at the first cryptocurrency, right? Like it set a framework for all of the crypto and blockchains to follow. Ethereum is the first programmable blockchain, right? And now we see Solana, Avalanche, Sui, Aptos, name it, and all others. And they're also trying to follow Ethereum's path, be a functional tech along with tokens that are incentivizing their developers, that are incentivizing their users. Do we need that many coins in the ecosystem? That's, I think, something that the market would determine in about 5 to 7 years or so. We do know that most of the tokens will, most with, some strong backing behind them, some strong technology behind them would rise eventually. But obviously, the market would eventually filter itself in the years to come.
Why hasn't the market filtered these out yet? It's been years at this point that we've had all these so-called altcoins, this other technology.
It has filtered out. If you follow these tokens on CoinMarketCap, initially the top 20 or top 30 assets have still been the one that are driven by volatility, but by large volumes. And Ethereum and Bitcoin have maintained its standing for past couple of years at this point.
If we saw an index with 6,000 companies, that was 12 years old. At this point, or 13 years old, at this point, so many of them would have merged together, right?
Yeah.
That doesn't seem to be happening in the world of crypto, or can it?
It is actually happening. So we have started seeing a couple of projects like Near, Cello, that originally launched at layer 1s, basically meaning another blockchain, trying to become an extended version of Ethereum. And that consolidation would continue in probably like months to come. There are a couple of like discussions around it. How does it happen? Does it go like the zero knowledge side? Does it go on the side chain side? How does it facilitate the Ethereum activity?
Matt, you spent a while back, you did this thing where you lived on Bitcoin.
I lived on Bitcoin for 2 weeks.
For 2
weeks, I
That's it.
spent nothing but Bitcoin.
This was sort of early on in the crypto
Yes.
world. My question for you, Ayesha, has Bitcoin lived up to its promise as an actual cryptocurrency a dozen years later? You don't see prices denominated in Bitcoin, at least in the United States. You see people, I think, more speculating and using
not
it.
transactional.
It's not transactional. It's a store of value. And was that the promise initially?
And this is something that I love teaching my class, like every single time the semester starts.
You teach at NYU.
Yes, I teach at NYU. I always say that, look, the Bitcoin's purpose was to be the first exchangeable cryptocurrency. However, USDC, the stablecoins, will probably denominate that market more than like BTC. And we could go into like how technically it's not feasible, 10 minutes to a transaction, does it really work, does it not really work? We have projects that are trying to build on Bitcoin and say that, look, we're going to make Bitcoin a lot more functioning. Is that possible? I don't know. Time will tell. But USDC, which is like, a deviation of Ethereum, which, came from Bitcoin, that's why you really can't, ignore the OG crypto, Bitcoin.
The problem is not just the functionality, right? But the value. The famous pizza purchase, right?
Yeah.
2 pizzas were purchased for 10,000 Bitcoin.
Oof, that's
shortly
gonna hurt.
before I started
I know.
reporting on it. That's currently worth $620 million.
Yeah.
I have to think that's the most expensive pizza that's ever been eaten.
Yeah.
And pizza is just pizza. So is there any way, even with the function, even with Lightning and all of this additional technology, that people would start to spend Bitcoin? It doesn't make any sense.
Absolutely no. I don't see it in my lifetime. I know probably, Bitcoin community would hate me for this, but I don't see it happening. I'll probably see like more of like USDC domination over the years, or, if like Fed decides to go on the stable coin route or banks decide to go on a stable coin route, but not BTC.
Even outside of the US?
Even outside of US, yes.
In countries where they're trying to make this work, in countries with really high inflation?
They're not trying to use Bitcoin to transact it. They're trying to basically build their treasury on it. So, as like a hedge against their inflation, but not to like, they could transact, their local currency using Bitcoin.
Fascinating stuff.
Ayesha, Kiani, got to leave it there. Thanks so much for joining us. Got much more coming up, including U.S. regulators weighing ETF filings for XRP and Solana. Next, we're going to discuss their chances of approval. This is Bloomberg.
Bitwise is the first to file for an ETF that invests directly in XRP, the world's 7th largest digital token. Bloomberg's Isabel Lee reported on this and joins us now. So we're talking about Ripple here. I guess we've already got ETFs for Bitcoin. We've already got ETFs for Ethereum. It makes sense that regulators would approve other large coins as well, right?
No, we don't know that, especially because this is the 7th largest coin. There's a Solana filing, and then it was pulled out, and we have Bloomberg Intelligence James Seyfarth saying it was dead on arrival because the SEC is still really kind of against this. They're kind of skeptical, and actually this filing comes against the backdrop of 2 things. Number one, it comes after a judge ordered Ripple to pay $125 million after improperly selling their tokens as a fraction of the $2 billion SEC wanted. And number 2, it comes against the U.S. presidential elections just a month away. And we know that the Republicans are viewed as more friendly towards crypto. So we also have people saying issuers will follow suit if the Republican president becomes the president.
Do people want this? Is this the type of thing that people are clamoring for the way they were clamoring for Bitcoin ETFs?
It's never going to be the same degree because the Bitcoin ETFs are really just a field of its own. I mean, even with flows, we have 18 billion in that. Ether is not even seeing inflows, it's net outflows. But still, you can't deny that ETFs are easy to trade. I mean, it's the 7th largest token. We have the Solana filing. You know what the 8th largest token is?
What is it?
Dogecoin.
Of course.
So that can be the next. I don't know.
So
but
is the next ETF?
Is there a Doge filing for an
Not
ETF?
yet.
Not yet.
I'm going to have to write that up if it happens, but who knows? We have Elon Musk still a big proponent of Dogecoin. But it really just shows how issuers are testing this ETF wrapper. I mean, basically anything could be ETF, even private markets. That's not approved yet, but people are really trying out. And you could see here that they're pushing the limits of the SEC.
Well, and it would make sense as well to be able to diversify crypto, a broader crypto ETF, right? One that could hold Bitcoin and Ethereum and Solana and Dogecoin and also Ripple.
There is that. You can diversify. I mean, for now, Bitcoin, the oldest and the most mature. When the conflict in Iran blew up, it was muted. So where's the hedge that people were looking for? So I think this is really, in a sense, space. Even the oldest coin is still not behaving as the way that proponents want it to behave.
Well,
so what
that's
more?
that's arguable, right? Because when we went into the pandemic and the government started spending like a drunken sailor, the value of Bitcoin went up. I would say that's because people were worried about inflation.
Okay, fair, but the fact that it doesn't have a solid narrative
True.
is indicative of like how new it is.
Okay, very briefly, we're speaking of Bitcoin, the Bitcoin ETFs. You mentioned flows. Just give us an update a few months on how they're doing and what you're seeing.
It's great. We're seeing a net inflow of 18 billion. They've broken record after record, but I think the important thing is how Ether is not seeing that. So Bitcoin could be a one and done game, and you can't assume the same for other coins.
All right, Bloomberg's Isabel Lee joining us here on set from Bloomberg News. Thanks so much. Well, we are witnessing a flood of crypto money into English soccer leagues abroad. Crypto firms have so far spent at least $170 million on deals for the Premier League's current season. This is according to Sportquake. There appears to be a rotation from gambling sponsorships as regulations tighten and teams avoid that industry as a result. And it isn't just in the UK. Major deals are also happening across the continent. For example, Kraken, a sponsor of Tottenham Hotspur, Atletico Madrid, and RP Leipzig. That's one of your favorites, right?
Yeah.
Plus, Crypto.com will sponsor UEFA's Champions League tournament all the way until 2027.
Are we talking about soccer?
We're talking about, yeah, this is soccer. This is football.
Yeah.
Football, I believe it's called.
I've tried for years to be interested, but
Nothing.
I can't watch a 2-hour, a 3-hour game that's a draw. Like,
It doesn't. It's not. There's no motor. There's no engine.
No,
so
it's
you're
such
not
a
interested.
giant goal and such a little ball. Like, they should get it in a lot more often.
Hey, they're too good. Those goalies are too good. The defense is too good.
I don't know.
All right, it's all F1 for you, man.
It's all MotoGP.
Okay, MotoGP. All right. That's all for Bloomberg Crypto. Join us again next week for more Bloomberg Crypto, and always check out the latest on the Bloomberg Terminal. This is Bloomberg.